I'd like to start this video off by saying I am not a financial advisor. Should you choose to invest in Bitcoin or any other asset, do your own research or seek the advice of an actual financial advisor, preferably one that knows a thing or two about crypto. Now, quick recap as to what's been going on for the past couple of days. First off, we were in this falling wedge. We broke out of the rising. We broke down out of the rising wedge. We went down into this falling wedge, and then we broke out of this falling wedge, and then we hit this resistance here and traded sideways, and then we got rejected, came down, bounced off this support, and now we're trading sideways. This drop, first off, it's this drop right here. There's a couple ideas floating around as to what caused this drop. First off, we had the auction of the of 4,000 Bitcoin that was sold. That could have had something to do with this. Another thing, Coinbase was down during the time that this drop happened. Binance was having issues from what I've heard. I'm not sure exactly how many issues or how deep it goes, but taking major exchanges out of the equation takes a lot of liquidity out of the equation, and so the market can be a little bit easier to manipulate without all that liquidity from those two exchanges. And somebody could have had a sell order that was above average, but not normally enough to move the market, but was able to move the market now, or at this time, because there wasn't as much liquidity in with Coinbase being down. It could have been that. It could have been the 4,000 Bitcoin sell from the auction. It could have been a mixture of the two. It could have been just a basic rejection off of this resistance. It could have been anything. So, as you all know, this market is highly volatile. I mean, Bitcoin's less volatile than it used to be, but still it's volatile. So, always expect something to happen. Don't ever expect the Bitcoin to just take one smooth trip up. It's gonna be a rocky run. Wherever Bitcoin goes, if it goes to 100K, if it goes to 200K, it's going to be a rocky run on the way up. It's not going to go straight up. You're going to see something like this. Well, maybe not like that. My drawing sucks, but you get my point. Pumps, corrections, pumps, corrections, pumps, corrections, pumps, and corrections, and pumps, and continue. Now, where will we go from here? Well, when we broke out of this falling wedge, and when we hit this resistance here and we fell, we kind of formed a new pattern, and it is a descending broadening wedge. Descending broadening wedge is a bullish pattern. A descending broadening wedge is a continuation pattern, and it could also be a reversal pattern. They typically look something like this. You'll see the price come down, then it'll kind of just bounce around and get bigger and bigger and bigger and bigger, and yeah, like, well, that looks like a golf club. Okay, let me try that again. Yeah. There we go. Well, kind of something like that. Yeah. And then it would break back upward. That is what a descending broadening wedge would look like as a bullish reversal pattern. Now, so let's say let's go over if we break down. What happens if we break down? If we break down out of this descending broadening wedge, that means we would have broken this 9.3K area of support. That means we would have broke this last bit of support in this trading range, and that means we would be falling to the next support, which would be roughly at $9,000, not between $9,000 and $9,100. If this doesn't catch us, there's one more thing just below that would catch us, and that is the 200 daily moving average, and that is roughly around 8,900 right now. Personally, I don't see us going any further than I don't see us dipping back below the 200 daily moving average. I mean, it's still a possibility. It's always a possibility, but I don't see it happening. I don't see it happening anytime soon. I don't see it. We may never go back below it for the rest of this bull run or bull market. It's not exactly a bull run at the moment, but bull market. But but it's always a possibility that we could fall below it. I just don't see it. Now, the fact that this is a descending, broadening wedge means that there's a better chance of it, of course, breaking up. Now, if it does break up, in order to find a price target of a breakout of this descending, broadening wedge, you measure the top of the wedge to the lowest point, and then that length gives you the breakout price, the target. And that target is, hold on, let's move up here. That target is $11,426. So we could be heading that way soon. Let's see. Let's go to the daily. As you can see on the daily, the RSI is sitting right on 50. So yeah, we definitely got to reach that end. We broke out of this trend. We broke out of this uptrend a while back. We got to reach that. We're good to go there. We can pump from here, and we'd have plenty of room to run. The stochastic is in the oversold area. That means we could expect some buying pressure to happen soon. We could expect a pump to happen soon. So just be ready. I mean, basically, there's a better chance of us breaking upward than there is of us breaking downward at the way things look right now. Alright, so, that, Bitcoin mining plant that's in Texas has started its operations. Bitcoin mining startup Layer 1 Technologies has begun operations at its West Texas facility with an ambitious roadmap to secure 30% of the hash rate. Layer 1, which raised $50 million in November from Thiel, Shasta Ventures, and Digital Currency Group, said it has now brought multiple 2.5 megawatt liquid-cooled mining containers online. Its short-term goal is to scale up to 100 megawatts and 2% of the hash rate over the coming months. But its long-term goal that's raising eyebrows. The company roadmap lays out a vision of repatriating 30% of the hash rate to the United States by the end of 2021. Citing national security considerations. On current figures, that would make Layer 1 the largest mining outfit in the world. More than 60% of Bitcoin mining operations are currently located in China, but less than 5% of the hash rate and none of the hardware for Bitcoin mining come from the US. In a statement, Layer 1 claimed that bringing almost a third of the hash rate back to America will enable the U.S. to offset China's dominance in Bitcoin mining and improve the country's national security efforts for an asset class with the potential to be a reserve currency. Layer 1 is designing and producing its entire mining infrastructure using proprietary ASIC chips and liquid-cooled mining containers that the company claims enables it to unlock warmer climates where low-cost, sustainable energy is available. However, much of its custom mining equipment won't be ready until mid-2020, and it is using third-party machines in the interim. Co-founder and CEO Alexander Legal said the company was already profitable in the short term and would thrive when others faltered as a result of the Bitcoin block reward halving in May. From hardware to energy, we've redesigned Bitcoin mining from first principles to control every profit and cost lever across our technology stack. Far too many mining operations still work from a playbook stuck in 2017. The halving will be the death knell for many of them. So, yeah, the Texas plant is up and running, and they plan to bring 30% of all the hash rate to the United States. That will definitely cause Bitcoin to decentralize a little bit from, and then China will of course lose its dominance over Bitcoin. Bitcoin is meant to be a decentralized asset, so I'd say this is a good thing. With that is all I have for you guys today. I will see you all next time, and I'm gonna go get some fucking sleep.